MMTs, that's the Google March expiration that will happen next week. That's a 580 call. Today's date is, guess what? 3/12/2011, and the time is 8:21 a.m. Pacific Standard Time. What we are looking at is a March call that at one time, its last highs over here on 121 were 67.50 a contract. So one contract was $67.50. Over here on this date, on 2/18 now, that's February, the high was $52.50, and that was on 2/18. Now, when we just look back over the last 5 days, 1, 2, so there's 3, 4, here. The last 5 days, the high was on 3/7/2011 was $26.11. That was the high. 3 days ago, the high was on 3/9. Now this is 3/9. Today is Saturday the 12th. But the high was 17.90 and the low was 12.70. They managed to close that day at 15.90, and that was 3 days ago. Now we're going into an options expiration, and on 3/11 date, the low was 540. They closed at 550. 3,500 was the volume totally traded, and the interest 2,235 contracts. The thing about it is, as an SMF MMT market maker in the option pit, is that we're famous for being a market maker, which is not a public model, because it's all about that wholesale bid. And the wholesale bid happens to be down here going into a triple witch. And Google's closing price was 576.71. 576.71. $22 million money flow and 3 million shares. Okay, fine enough. The high was 580. And this is a 580 call right here. That is going to, Google will have to, on its daily movement, have one of them $15 breakout handles, because the stock itself down around when it made the lows of 573.33, that's a pretty good target in there. And basically we're going to see if it undercuts it and goes down. We have a price target down there of I think what is it, 570, and I think also 568 and some change. The $80 call is a major call, and let us not forget that there can be a drop down bid next week. We will put market orders out off of the videotape with each MMT. We'll go ahead and crown these limit orders up and set alarms on them now. We're also going to be looking at the 570 call. And I'm going to put the 570 call here in the level 2 as well. And this call contract is slightly in the money. And just to show you that Google closes at 576 and that we have a 570 call. Okay, so there's the closing price, and so it's called in the money call. And it's very cheap at that particular strike price, MMTs. So by understanding how to use the MMT platform to get the entry, is that when we make markets, these contracts were very expensive 5 days ago. They were $35.55 on 3/7/2011. So the value to the public has dropped significantly, as over here when they were up above, when they were really up here at $75 a contract back in January, people held them. The public does. They'll hold them down. When they get ready to sell at the bottom where that wholesale market is, that's where we're going to be doing the buying. Because these are deflated MMTs. And they're in the wholesale range, meaning that all the noise and all the value drop. I mean, my goodness. Dropping from $40 a contract right here. And that date was on 3/3. Okay, so basically this side of the market is what? Wholesale. And wholesale equals deflated price action. That's what we have. And we're going to make a market with this call here as well. Because there's going to be some great price action made in it, because when you get the lower end of that market maker and they break the equity higher, you're going to be able to, these contracts have got a spread on the way up. Just remember though that after them taking out most of the premium, even the premium back to the upside won't be as large as what people will think MMTs, and you'll have to know where to sell them at now for your profit structure. And this is the 570 call, and this is the Google. So it's very important that people get with this, because this is the trade. And we also bought some call contracts that if the March contract works well, is that the April contracts are also very wholesale. And they're wholesale in the respect, and they can always get more wholesale depending on, Google could come down lower in price. But we are at wholesale levels. And we can go a couple dollars more wholesale. Nothing's set in stone. It's when the equity is ready to make that daily breakout is when this transaction is going to be required for these to break higher here. And for this one here during that triple witch is that these, markets, the way that they're made from that wholesale, that's that bottom up price action. That's okay. I'm down here wholesale and I'm selling them at a higher price to the public. Okay. 416, $600 call. Not a bad price in this area at all, because it's a scalable contract for the April earnings, and Google will report a good number. So there's that one as well, MMTs. And 570, 580 call. And once again, it's going to all get back to this right here, your platform. And we already know by looking in here where we're at as far as the price goes. And basically, Google could come down here to 7/8 delta negative. That's 570.87. Okay. During the actual volatility, the negative delta is where the price action is going to bounce like a rocket off of that. And if you get a left elbow gap down, that means it'll gap the contracts down, and you'd buy those right off of that hammer, because you would. And learning how to trade options, when they have a left elbow gap down in the equity, well, they're going to do a left elbow steal the premium in the call price. And that's when you want to buy it, is when they're stealing the premium, is when you want to be down there getting hit, because that's the true wholesale price market. Okay, so there are some deltas down. And, one full delta is 570.4 pennies, for crying out loud. They could do that on a gap down, but they can also do vice versa. On the other hand, they could gap it up, a half a delta. That's 580.05. That's $3.34 higher on a gap, 3.34 ratio, period. Okay, then everything else would burn. The favorable thing about the lower end of this particular expiration, even though that the indexes are in a correction, you cannot ignore it, because it's not like you're in a bull cycle right now. You're in going on a 4-week top reversal, and the index is down, the ones that we called for. It's on stockmarketfunding.com. Once again, you've been given a gift, and the thing about it is it's about making a market with these options next week. Okay? Why the ripe, it's the, triple witch, and that's all I can say.